Hey, we're live. Welcome, everyone. December 7th. I'm getting in the Christmas spirit. I've been humming Christmas carols all day, annoying people. It's only going to get worse. Hey, what a week we've had. Oh, my gosh. As we wait for people to come into the room, and again, if you see my mouth moving, you can't hear me, let me know in the chat, please.
I can see your mouth moving, but garbage is coming out of it as normal.
Anyways, yeah, been quite a week. Little bit of action, and a lot of things to talk about. A lot of cool stuff going on. The volatility has been, well, it's coming off right now, and we've got some very interesting insights that we were observing during the last rally that made us really question what was going on. And it turned out, I'm not going to say we were right, but we were right-ish in a way. We're going to take a look at the charts, all kinds of good stuff as we wait for a few more people. Andrea's there. Core from Holland. Good. Got some of the regular crew. Got lots of new people as well. Dom. Yep. Great to see everyone here. All right. Let me just... Okay, we may as well get started here. More people coming in, but that's fine. As a reminder to everyone, hey, if you don't have a Deribit account, Deribit, of course, is the place to be if you're trading Bitcoin or Ethereum options. Check out the chat. We've got our special link there. You can save 10% if you don't already have a Deribit account, and you can do us a solid in the meantime. Okay, so let's go through today's agenda, and I've got them set up here on the slides. As always, we're going to do a little bit of a market analysis. We're going to review some current trades and strategies that we have on. And this is going to be, so it was a bit co-mingled before because we manage books of options. And, you know, I'm not going to tell people about individual strategies because there isn't really, it's just sort of managing a book. But we're sort of separating out discretionary trading. That's what we want to show here. So I'll just show the discretionary trading account stuff here from now on because it'll be more relevant to people. The topic today is, thanks to Richard, it's a tremor in the force because he is a Star Trek nerd. Well, he's probably just a general nerd, but he's also a Star Trek nerd.
I'm not a Star Trek nerd. I enjoyed the first. Wait a minute, Star Wars for a start, not Star Trek. The whole Force business.
I said Star Wars.
You said Star Trek.
Oh, did I? Oh my gosh! Well,
yeah.
I'm just not a nerd.
Anyway, and I'm a bit of a purist about Star Wars. Episode 4 was fine, entertaining. Episode 5 was fun. Episode 6 was just garbage, and all the rest of it not worth mentioning. Anyway. Yeah.
All right. Well, we'll just let that go for another day. We'll talk with our private members who really want to know. A tremor in the force, and it's actually kind of, you know, as much as I'm making fun of Richard, there's a reason why we put that. There's been some market structure change and some interesting developments in the crypto markets in general, which I think you'll find extremely interesting and led us to make certain trades that we made. And it might still influence the trades we make going forward. And we've got some December predictions. Boy, we don't usually make predictions, and that's a powerful word, you know. But you know what? It's all related together. So, you know, stay tight for that. And here's our little plug. Hey, if you don't know us, we're the Rogue Traders from the Rogue Trader Academy. And for silver members and higher, if you want to join us, we've got interactive live trade alerts channel, which is cool stuff. Our discretionary trades go on there. We've got a weekly call we do with our members, access to all our courses. We actually got a course coming out. I hope to publish it by mid to end of next week. It's all about hedging, everything you ever wanted to know about hedging, probably too much. And we've got, as I've mentioned, we've got daily updates and live stream going on. So we live stream on Patreon and hopefully soon on OnlyFans. We'll be the only two 50-year-old guys on OnlyFans. So that's going to be a lot of fun for us as we get that set up. So let me stop sharing this, and let's head over to the charts. We're going to take a look at some stuff. I'm going to show you some trades that I've got going on. And as always, I'll just mention this before we get started. Any questions, drop them in the Q&A box in the chat, and we will get to those, or as many as we can, by the end of the call, the 30 minutes that we have we try to keep it to. All right, so what am I doing? I'm sharing my screen. Give me a second here. Turn my screen sharing on and bring up our silly charts. Bam. You can see that? All right. So, ETH, it's funny. These unicorns, those are my unicorn trades. If the price got there, and I put those on a while ago, this one on the bottom, I adjusted that. But the one on the top has been kind of at this level for, well, since maybe the spring, I think. So I think we could move the unicorn up, and maybe we'll make them a little, I don't want to monkey with it too much. I thought I could make them smaller there, but I don't know how. I don't know. It doesn't matter. But it's still a unicorn trade up here, and we can see this band of resistance up here. Oftentimes it'll bounce up at the bottom, but just as many times it'll seem to penetrate deep into that, then pull back. So anytime we get a move into these areas, I love selling call spreads above it. Just love it, love it, love it. And sometimes I'll even take long puts on the way down or do a risk reversal, things like that. I'll sell a risk reversal, which is buying the put and selling the call, using the call to finance the put. So I don't have much going on in ETH right now, but I do have some stuff over in good old buddy Bitcoin. And here's the chart. So here was our original trend line. We stuck to it, stuck to it, stuck to it. Look at this ascending triangle. This is what I showed you guys last week. I said we were right into the tip of it. It's going to bust out. It's going to go one way or the other. Ascending triangle is a bullish pattern, probably going up. Kaboom! It went up. Now, not really a big surprise. I don't have my crystal ball here because of all the potential news coming out. Bitcoin, everyone was very bullish. The volatility surface looked bullish. Everything looked bullish. So it was no big surprise. As vol sellers, we had to be prepared for it. So we scaled down a little bit. We had a little bit more futures on board. We did some things so that if it did get a sudden unexpected burst, we weren't hurt too badly. It wouldn't take us very long to pull that back. Very seldom do we go long gamma. Occasionally we do. We should have done it there. We were talking about doing it at the end of the month, but we had our call last Thursday, and lo and behold, on Saturday, it really started to run.
It was beautifully timed, actually. So for the whole month of November, I made my book made 35% increase in value, which and then right after I reported that, then 10% loss on the mega rally. But still, you win some, lose some. 35 up, 10 down. It's fine.
Yeah. And if you're selling volatility, if you're an option seller like us, you have to get used to the idea of your equity moving up and down. It's normal. It's totally normal. Nobody just has their equity going a one-way street straight up. It's absurd. Doesn't happen anywhere. A hedge fund, doesn't matter. It won't happen. So I did put on a little scalp. Was it yesterday or the day before yesterday? Maybe on the 6th. I sold some 08 December 46,000 calls, naked calls. Well, I suppose they were technically covered because I have Bitcoin in the account. When it was bouncing around here, I thought, I think that's it. And we were at the top of our range. Remember I said we'll often bounce off the bottom or we'll penetrate deep into it, and then we'll come off. It did. And this is just eyeballing it. I'm just way back here eyeballing it. Look what it did, right? Technicals matter. We don't want to base our entire, decisions on them necessarily, but they matter. They can influence things. So when it was bouncing around here, I thought, you know what? That's it. That's it for now. For now, I was happy to sell these calls. Sold them for about $180 a contract. I covered half during the night last night, and the rest either I'm going to. Well, I've got a low bid in. I'm on the inside right now, so I'll be covering those. But this morning, I did put on a trade just before the drop, actually, which was really nice timing, which. Just pure luck on my part. I did buy a debit spread, a put debit spread. I bought the 41,000s, the 43,000s, and I sold the 41s because I felt we have a good chance of a retracement. But I didn't think it was going to necessarily go a lot below 41. If it does, I'm at max profit anyways. I don't care if it goes to 40 or 39. It's just more money I could have made. But you know what? We're still very bullish. We're in an uptrend. And I drew this new little line here just to kind of show the uptrend. Started to look good. We'll see if that pans out. If that trade doesn't pan out, let's say it goes back up to the top of the range. Could do it this afternoon. Who knows? I'm just going to close that put debit spread and collect some of that money back. At the same time, I did put on a credit call spread. Okay, I sold the 49,000 and I bought the 54s as protection because I felt that by the end of next week, we probably won't be up to 49. If we are, I'll manage it. So that is the silly charts. Now, I've shown my chili shirts.
Chili shard.
Yeah. If you know what a shart is, let's not talk about that. All right, here's the poll. I got to give you guys credit because last week you were right. Remember, I said we're going to go up. That was last Thursday before we went up. Are we going to go just a little bit up? Are we going to go flat? Or are we going to go down? Almost everybody, like 60, 70% said up, maybe up, and boom, we went. So kudos to you guys. I hope you made some money on the call that you were predicting. So here's the
just to show you, if you get enough fools in a room, then on average I'll be right.
Right. It's like 1,000 monkeys on typewriters, right? Something. So just put your prediction of what you think is going to happen for the rest of December, up, sideways, or basically flattish, or maybe some amount of retracement. And I think they're all actually pretty reasonable predictions, to be perfectly honest. And when Richard gets into his details, I think that's going to reinforce this. So I'll let this poll run, and I'll close it at the end of the call. So as we mentioned, here, let me stop my screen share now. As we mentioned, Richard and I were watching this rally unfold in real time, especially during the night. I think Saturday or Sunday night, we're up quite late. It was really strong, but the numbers flowing back to us didn't make a lot of sense. And then we spoke about on Monday about this call. We noticed some things decoupling that we would normally see. In fact, last week, what was the topic of the call? The topic was, why does spot and vol have a correlation? They move together. Well, it decoupled. It's the first time we've really noticed that. And that came along with some other market structure changes. So, Richard, I will let you take this away and talk about what we've got going on there.
Yeah, sure.
As soon as you're finished, typing.
That's fine. Don't mind me. Right. Screen share, right? Yes. I'll do that again. Entire screen. That screen. Yes. It numbers my screens wrongly. There we go. Bam. Okay. So I'll first of all talk about what we saw during the rally, and then I'll talk about what we're seeing now. So normally, if we see a rally in the market and it's kind of it matters, then normally we'll see strong skew to the upside. We'll also see a rise in at the money vols that's strong, and we'll see a lift in the cost of carry. We did see a lift in the cost of carry during the rally. We saw a moderate skew to the upside, but not strong. And we didn't see a rise in at the money vols that was anywhere near what we would have expected. Which kind of, I suppose in hindsight, it's probably because the rally was all in spot, not in futures. And so on the one hand, you could argue that means it's a real rally, so people putting real money in. On the other hand, it's not a FOMO rally, which means that it's unlikely to continue beyond where it gets to, right? And people who are going to spend their own money are not going to be keeping on feeding the market, shoving coal on, because eventually all that money runs out, and then you've got your old Bitcoin. So while it was terrifying, because any 10% move is terrifying, particularly when you're short vol, all the logic was screaming, this will stop, and this isn't going to pump. But the thing is, it's emotionally, it's very difficult to maintain that position when, if a pump carries on, it's going to cost you thousands of dollars. So, excuse my dog, it's actually sick.
Oh, great.
Live on camera. Is it?
The barfing dog. Well, people are getting their money's worth for entertainment value. It's not just about trading.
It's just going to leave it. Pick it up. Right.
Well, let's not watch him eat.
Deal with that. I'll just stand over here.
Yeah.
Right. Yeah, so all the logic dictated that it would stop, and indeed it did. And in fact, very close to the edge of the range that Shane painted on the chart, that range comes from historical trade numbers back in 2021 and 22. So my accolades to Shane for getting that right, and he also predicted the breakout. And had I believed him, I could have made a fortune So next time I will. What's happened since? Well, the rally stopped so far, and we've gone into sort of flatlining. And initially, I was a bit concerned about that because I thought if it flatlines after a rally like that, then is it just pausing for breath for another leg up? Because normally, if it's going to come back down, it comes back down pretty quickly, right? But now looking at the vol surface, you see that I've got the vol surface up here on my immersive screen. Pay attention to, I mean, sure, at the money vols, the yellow lines come down, fine, that always will, right? But pay attention to the red and purple lines. These are the 10 delta calls and 10 delta puts. And for the past 6 weeks, the calls have been easily higher than the puts. And then last night at 3 a.m., they converged and touched, which means that the skew vanished from the market. So now at 3 a.m. this morning, the market didn't know whether it was going to be going up or going down, while vols are dropping and while spot is flatlining. And then this morning, after expiry, we've had a bit of jibbery pokery, and in fact, puts got more expensive than calls, and now they've converged again. And to the point now where the 10 delta risk reversals are essentially zero. And the 2 week, that's for 1 week, and the 2 week risk reversals are basically zero. 1 month, 3%, as good as zero. That includes a bit of January, but mostly December. And then the 3 month includes a bit of January and a bit of March, February and March. And so 5% skew. We were at 14% skew a week ago. So that's a big change of sentiment amongst call buyers and put buyers. That's either people are no longer willing to egregiously pay for calls, or people are becoming a lot more concerned about buying puts. And if you look at the monies at 1 month, that has been on a downtrend. If I show you over 5 days, whoops, I'm using the beta version here. Look at it over 5 days. Constant maturity at the monies 1 month. We're selling off, right? And this kind of tells me that the market is totally comfortable selling strangles.
Mm-hmm. And the interesting thing too, Richard, that I'll note that we were talking about, especially on the weekend, is as everything was pumping up, sure, calls were getting more expensive. Vol was rising, but it wasn't. It didn't hit the previous highs of 2 weeks ago. It wasn't rising as much as you would expect on such a big rally. And we could see on the volatility surface, well, on the derivate volatility surface too, you could see that basically for the remainder of December, there wasn't a lot of interest in the calls. When you got to January, yeah, those are still quite elevated. We thought, well, hang on. During this rally, shouldn't those Decembers be rising up to at least get close to the Januaries?
Yeah.
But they weren't. And that led us to believe that this there's something wrong. And we saw in news articles, I think it actually came up on the Deribit screen that I think that's where we saw there was rumors or talk about some whales working together to push the price around. And as you said, the move was mostly in spot, not futures, which means it's not leveraged, right?
Yeah.
So
because it's just very interesting that the rise in vol lagged it, the futures lagged the spot, everything. The funding rates, the funding rates increased a bit, but not massively.
Mm-hmm.
And in fact, into that rally, I actually sold December futures versus buying perps because I figured I'd make money doing that. And I'm currently earning 8.5% on the December future and paying zero on the perp at the moment. And if there was genuine belief in the market that we were, or at least in the derivatives market, and I like to think that derivatives guys are a bit smarter than your average market participant. That means you guys. Then I would expect an optimistic market that was thinking about trillions of dollars coming into ETFs to be a lot more bullish than this. So that kind of puts me in the camp of probably going sideways for the rest of the month, which is also into your view that we're in a range. We've spiked into the top of a range, and we'll probably just track along that range. And I'm starting to think that actually, it's a gamble, but actually being short vol in January, for me, starting to feel like a okay place to be. I was kind of forced to roll a few positions into January anyway, but I didn't feel bad doing it. I kind of felt I was going to get value there.
Mm-hmm. And I'm still a bit nervous about the January myself, because I feel like still like anything could happen. We could be at 60K in January, we could be at 30. I don't know. So I'm trading it very cautious, and I don't want to bring a lot of risk into January if I can help it. And I think Rich and I are both quite happy to bring risk forward, especially with lower vols now, to realize that intrinsic value as we can.
Actually, 65. Well, we're to 10 delta calls in January now. What 60ish, aren't they? So look, strange warriors.
Yeah, and I don't remember what they were a few days ago.
They were in the 70s, 72.
Okay.
Yeah, so
big difference.
It was better value than it is now.
Yeah.
But still, 60 vol, the market's got to move quite a lot every day for that to be wrong. If you're hedging every day and quite
okay. All right. So, is there anything else we want to talk about with this? I don't. Predictions.
Predictions. Yeah.
Predictions. Oh my gosh. Wow. Well, I mean, on my side, I still like a bit of a pullback. Now I'm going to be prepared. Even if I don't make money on a pullback, even if it just happens that I didn't get involved, fine. I didn't want to spend the money. I like a pullback, and then I like the reversal off of a pullback because I think we're still in an uptrend. If we got some stupid pullback, went down to 38K or some, a big move, I'm all over that long. I'll be selling put spreads. I'll be maybe taking some long gamma trades. Quite happy to do so.
Scare the bejesus out of people. 38, pull back to 38 is going to frighten everyone.
Yeah,
frighten all the short puts away.
Yeah, and I don't know if that's going to happen if the long-term goal is to get the price up, because the market rarely gives people golden opportunities to get in. But it could. It's crypto. It's a little bit different animal.
If people just go selling, shit tons of puts on the basis that it's not going down, then
yeah.
So if you see that January 10 delta put drop to say 55, I would see that that's an open invitation for the market to come down and scare those people who've sold it.
Yeah.
And they'll drive it up horribly. And then that'll be the time to sell puts, right? Yeah.
We want to be good on our timing for sure, and we don't want to. The market's still immature enough where those whales, those market makers, can move it around. So on the downside, that's what I'm thinking. I don't think we'll get a retracement that big, but we could go down to 41, 39 and a half. Prior resistance usually ends up being support. I wouldn't be surprised if it goes sideways either. If we go sideways, I think we might trend up, a slow sideways trend up, to be perfectly honest. If we do make a big move, my silly charts show a bit of a gap between 44 and 46, 47. So I think if we do up, it'll be a vacuum in that gap, and the next resistance will really be 47, 48, all the way up to close to 52. So if we can push up to around 50-ish on the upside, oh boy, am I going to be selling calls. Oh my God, I'll be selling all kinds of calls, mid to high 50s, all over the place, because vol is going to shoot through the roof too, if the prior patterns hold true. So
it's worth saying today that we took an opportunity today to buy some tail risk because it was getting cheaper.
Yes.
And even though it's only through till Monday or Tuesday, it's going to last. We just... Yeah. If anyone was going to play some shenanigans, it's going to be this Friday when everyone's sighed a big sigh of relief, or on the weekend when no one's expecting it, right?
Like last weekend, yeah. And I would point out too, as we were discussing on our live stream this morning with our members, we were talking about buying the tail risk, and oh my gosh, it was like 1/3 cheaper than it was yesterday.
Yeah,
the price fell, so it was like, okay, this is bargain basement prices. Let's make sure we're covered with tail risk. But as always, as traders, we have to be flexible, adaptable. We're not a bunch of degen newbies who's been doing this for 2 or 3 years. We don't just make a prediction. It's going to do this. Sometimes you're right, sometimes you're not. But we're prepared for any eventuality. Sometimes we've got probability pointing it one way or another, and sometimes we'll just stay out of the market. Let the market show us what it's going to do, and then jump in after it's done something unreasonable or something we could have expected, I'm happy to take the other side or take the vol off people's hands who are desperate to get out of it because they're so far underwater. So that's kind of my prediction for what we're going to see for the rest of December. I think we've got lots of good trading ahead of us for the rest of the month.
I think one thing for certain, vol is back, and that means that there's plenty of opportunity to trade the swings and get in if you miss it the first time. You can get in the second time, either long or short. So don't worry that you missed it. No, I never. The gift of being flat is sometimes just the greatest gift of all, because then you can jump in afterwards when people are screaming in pain. That's usually the best time to get in. Blood on the streets, right? So we had some. My personal Obi-Wan Kenobi is a guy called Keith Williamson. He taught me how to trade options, and I remember his words. I was getting pissed off because I wasn't in the market, and there was loads of vol to be had. And he turned to me and he said, "Much better to be out wishing you were in than in wishing you were out." And boy, that's a lesson I learned these times. Word
of wisdom indeed. We've had some funny comments. David admits, he publicly admits to being both a Star Trek and a Star Wars nerd. He's kind of a nerd. Dom, yes, OnlyFans, Dom. We're still trying to work the account out, but hopefully we'll have that resolved in the next week. But yes, OnlyFans.
I mean, look, in fairness, Star Trek had Lieutenant Uhura and Star Wars had Princess Leia, so who wouldn't be a fan, right?
Andre, yes, we're shilling charts. Dom says DEC average returns are much lower anyways. He must have been referring to a comment we made, I don't remember. Okay, a question from Stanislav. Do you think it's true or not for retail traders, the simpler his trading methods, the better? Yeah, I think so, but I think that evolves. That you got to start simple and then let it evolve. That's how I view it.
80% of the profit you're going to make is just by selling vol when it's high or buying it when it's low, and being on the right side of a move by luck. The rest is the finessing is where you can squeeze out the extra 20%, right? So you can be a Neanderthal and make money for sure.
Question from Dom here. He's saying, I often get lost on what kinds of profits to take. Selling weeklies, I close out at 90%. Not sure why. What's the reasoning behind that? When to take 50%, etc. Wow. That's kind of a pretty open and broad. I can make some general observations while Richard thinks on that. If it's covered calls, I'm going to give it lots more profit to pull out because it's a covered call. So maybe I'll be taking it out at 75, 90%, something like that. If I'm selling naked, I'm happier to take that risk off the table sooner. The short dated stuff, you're going to see the decay. If things start to work for you or things just go sideways and you sold, it's going to decay fast. You'll notice your 30% ROI all of a sudden turns into 65% to its sweet as that decay really kicks in, or as the price starts to move in your direction, and it gives you great opportunities to get out with really good profits. I know there's a lot of traditional thinking out there, especially if you're trading the SPYs or stocks where you're taking things off the table at 20% ROI or 25%. Nothing wrong with that. I suppose that's your style of trading, or scaling out. I'm a huge fan of scaling in and out of positions. Well, look at the 46,000 short calls. I said, no, I'll take out, $50. I sold them for 180, bought them back for 50, and I'll let the rest ride. No problem. It was a short-term trade. It was a 3-day trade. I knew that the decay, if it started going my way or didn't do anything, was going to work for me. Sure enough, it did. Got lucky. Wonderful. I think it really depends on your comfort too. You're not going to go broke taking a profit, but you don't want to let too many get away and live in regret and say, oh, why did I take that 10% when I could have had, 180%? Well, scale in and out, and you resolve that problem.
I was going to say the same thing. I think there's a slightly different way to think about it, whether you're long or short options. If you're a short option seller, which is generally my natural trade, then you kind of do the opposite of what most investors do. You kind of run your losses and take your profits. Because the reason I think I equate this to the same reasoning you go through when playing blackjack or poker, which is if you're playing poker and your hand is terrible and somebody else has gone in and bet, confidently, the probability is you're going to lose. So why would you chase it with more money? You're better off cashing in your loss and preserving capital for the next hand. And I see selling vol very similarly. So there are kind of three scenarios in selling vol. One is where your option is clearly going to go out worthless. Well, when it gets close to worthless, there's no more juice to squeeze from it. So let's say you sold it at, 90 basis points, and then it's now down to 6 basis points. You've already realized whatever it is, 90 over 6 is 6 over 90. 90% of your profit, right, already. Why risk it all for an extra 6 pips? Why not just pay the 6 pips, get off the table, count your blessings, you won, walk away, go find another opportunity. Or if you sold it for 90 and you're now getting close to, it's close to out the money and it's still 90 or 120 or you're showing a small loss on it, well, you've got a choice now. Do you feel lucky? Do you believe the market's going to, revert and you're going to get a better chance? Or do you say, you know what, I will just preserve the intrinsic value and roll that position into a 1x2 or a call spread or 1x3 or whatever you've got margin for, or a strangle, or, all those things. And you choose the best scenario based on what you see in terms of the vol going forward and how quickly you want to realize your profit. So and then that's the second one. And then there's the time where you're at or in the money and the market's still charging against you. Well, the logical thing to do is take the damn thing off the table and take the loss and walk away confident in the knowledge that you are going to go and make a profit another time. But what you absolutely never want to do is be in a position where you could get it back for 6 basis points and you didn't do it because you were greedy, and now suddenly it's 120. And that can happen in a heartbeat in crypto, particularly in Bitcoin. Bitcoin is like the ultimate teaching tool for hubris in markets. You've got to take your profits when they're there, and never take anything for granted. Now, on the flip side, if you're long, I would say that being long options is kind of the same as being long stock, isn't it? You kind of take half on a double and leave the rest to ride if you still think there's juice in it. And you stop your losses early if you're, because you want to preserve capital. I think that's the same. It's the same, isn't it? Let's just buy and stop.
Yeah, I mean, it's easier even if you let 10% ride for an explosive 1,000% gain, which can happen. Wonderful, go do it. Yeah. But as soon as you can, lock in profits to make it free, first of all, and to take some profit for yourself.
The whole point of being long options is to build in optionality. So if you bought the options for 100 and they've moved to 200, you buy half of them back. Mm-hmm. You could even just quickly spend the rest on puts now, if they were calls. You could turn it straight into a straddle. Mm-hmm. And now you're totally you've now bought a straddle for the same money you bought an actual money call spread for. Yeah. So it's a total win, right? So
yeah, and there's so many other things you could do too. You take half off, and you think, well, I don't know, it could go a little bit higher. Well, you know what? Sell some calls a little bit higher than the extreme price, collect some premium. If it goes up there, you're still going to make money on both of them. Yeah. So there's a million things you can do, which is the wonderful thing about options, and that's why option traders are so much smarter than those dummies trading futures and stocks and stuff, right? So Dom has a question about call sellers rolling to strangles. Can you just put some context in there? What
sorry, I brought this in from the chat. I was talking about the way that the risk reversals have reverted and puts have become as strong as calls in terms of vol. And I think that's where his other comment about the DEC average returns, which I'm not quite sure I quite understand, but. So is it because call sellers are rolling into strangles? Actually, if anything, I would say it's because put sellers are now selling calls, not puts. Or people who are long calls or long call spreads are now selling their upside because they're cashing in or something like that. I think there's a belief in the market. There's enough people that matters that are saying, you know what, there's no more juice in the upside.
Yeah. Okay. All right, we're at the end of our time, and I've just published the poll results. So the question is, now that we've had a strong move up for the rest of December, up, sideways, or retracement. And most people, I'm a little surprised, think that we're going to go flat or sideways for the remainder of the month.
Well, on the basis that crowd thinking is correct, I think then we sell calls into the rallies and we sell puts into the dips, right?
Yeah, we talked about in our live stream today. Maybe now is the time to sell some short-term iron condors or strangles, and we were kind of with vols collapsing so much, though. I'd rather wait until we get to the bottom of the range and sell the put side, wait till we get to the top of the range and sell the call side to really maximize the value if we get that kind of movement. But the market rarely gives us perfect opportunities. But that might be the trade. Could we see vols continue to collapse, or stay low during the remainder of December? Possible, but with these crypto whales doing stuff, with the news coming up, I don't know. I mean, we're just as likely to have a quick 5% move one way or another, I think, as well. So we've got to be very, very careful right now.
Right.
And we were very cautious. I don't think we sold any new risk today. We moved some things. We bought back some things. We sold into strangles. We did a few adjustments on some accounts, but we weren't really selling a lot of new risk right now. And
I've been busy rolling stuff away from the money. I had a load of risk, short calls on multiple weeks. It was really quite uncomfortable at 44,000, and they all got. The market gets right to the point where it's trying to scare you. It's a game of face off. Who's going to blink first? And all my instincts are to get out of the way of this juggernaut. And so I did on some of the positions. I actually bought back like 42,500s before we got there, and bought back some 43,000s. And I'm happy about that. And then that left me some juice to be able to roll my 44Ks up to 47-ish, 46, 47 in 1x2s and 1x3s. Because I figured, I'm long futures and we're going to get there. If we get there, I'll be happy because I can deal with those. No problem. That was kind of my thinking there.
Yeah, it's like the ultimate procrastinator tool when you're rolling. You're like, I'll deal with it another day. Mañana. It's the perfect way to view trading. So. All right, guys, we're going to shut her down. As always, thanks for joining us. Visit us at roguetrader.academy or check out our Patreon, patreon.com/Rogue Trader Academy. And maybe you can chat and hang out with us every day. Other than that, we will see you next Thursday.
Oh, by the way, the dog's name is Caesar.
The dog's name is Caesar. There's two of them.
He's absolutely fine. He's probably just eating too much garbage.
All right. See you later, everyone.
Okay, cheers.